it's Sofia, and if you're here, you've probably seen the post of Donald Trump promising a $2,000 tariff dividend for most Americans. It sounds huge, right? $2,000 back into your pocket, supposedly paid for by tariffs. But let's be real, anytime someone says free money, we want to know where it's actually coming from. But before we jump in, let's make sure you hit that subscribe so you don't miss a beat on what's moving the markets. So we're breaking this down super fast. What this plan actually is, whether it's even possible, how markets are reacting to this, and what it means if you invest, trade, or just care about inflation eating your wallet. So first, I will break down what's being promised. And the thing here is that Trump is saying Americans will get a $2,000 dividend. But the Secretary of the Treasury, Scott Bessent, says that it might come through tax cuts, not direct checks. So that might look something along the lines of no tax on tips over time or Social Security income, and also deductions on auto loans. So instead of mailing everybody a check, it's about letting you keep more of your paycheck. But it's time for the math, because here's the truth. Giving every middle income American $2,000 costs around $300 to $500 billion. And the tariff revenue is only $85 billion a year. So if you do the math, it actually doesn't work. That gap would have been filled by debt or by printing money, which means inflation, and inflation hits way harder than a $2,000 bonus help. So that dividend isn't really free money. It's a tax shift that could cost you and your portfolio later. And you might be wondering, why are we talking about tariffs right now? Because this is what you need to know. Because when the US puts a tariff on imports on foreign companies, they don't magically pay it, but importers do. They pass it to retailers, and that means you. That's why the last tariff cycle raised prices on electronics, clothes, and cars. Right now, the administration is defending those tariffs in the Supreme Court. If the court rules against them, the US could owe over $100 billion in refunds to importers. That means the funding for this whole dividend idea might not even exist. So this is less of an economic plan and more of an election headline. This is politically smart, but it's really financially not stable. But this is the issue for all the people who invest, because let's talk about the markets. This is where people actually lose or make money. Because right after this announcement, we saw these bond yields spiking. Traders were expecting more inflation and higher rates. We saw big names dipping, industrial and domestic manufacturing names popping, the dollar going up, and expectations of a tighter Fed. But where is this logic coming from? Here is the issue, guys. It's a tariff. Let's lock in, people. If tariffs raise prices and tax cuts raise spending, you're pouring gasoline on inflation. That forces the Fed to hold higher rates for longer. In the medium term, their purchasing power shrinks. In the long term, you're going to see a lot of volatility as well. But if you own really heavy import type of stocks, like it's tech, auto, retail, you are going to see these margins squeezing. But we see companies that produce domestically, like steel, energy, defense, construction. They might ride with this type of wave. But here's the tricky part. These rallies don't last if policy is incredible. And we know a lot about how credible Donald Trump sometimes can be. So until Congress passed this is just type of noise. It's sort of noise. But what is driving Donald Trump to do this? Why is this happening right now? We're in this election cycle. And who would look good having this into his headlines would be Donald Trump. A $2,000 dividend sounds like cash relief without calling it a handout. But there's more to it. The Supreme Court case on tariff could undercut his entire trade strategy. So this plan is also a way to sell tariffs as a success story. Like, he is playing like we're taking in money and giving it back to people, except the numbers don't line up and Congress still has to sign off on any tax law. So what we're having right now is political marketing, not economic policy, guys. And Wall Street can smell that from a mile away. But if you're listening to this video right now as a Gen Zer, as an investor, a new trader, here's what actually matters. Don't trade on headlines, trade data. Watch inflation reports, CPI prints, and bond moves. If yields jump, that's the market saying inflation risk up. And of course, you need to keep an eye on industrials and domestic manufacturers because they're going to benefit off of this. Retail and tech, that depends on imports and that could drop a lot. And if you're in crypto or commodities, volatility is coming soon. Inflation fear usually means people rush to hedge assets like gold and Bitcoin. And when politicians are saying trillions in tariff money, always ask who paid those tariffs? Who paid for those tariffs? Because it's not China, it's us through higher prices. So if any of your friends is actually fighting you tomorrow at lunch table or whatever type of event, you can say Trump is saying that there's a $2,000 tariff dividend coming. Treasury is saying that it'll be through tax cuts, not checks. Economists are saying that it's not funded tariff revenue, it's way too small. And markets are saying that inflation risk is back with this. The Supreme Court could throw the whole thing away. So basically, this is a really nice headline. A lot of people are getting so hyped, but this is in real life, this is ugly math, guys. Do the math, do it yourself, and you can tell me later. Comment down below too. So yeah, the $2,000 tariff dividend sounds great in a tweet, but in real world, finance doesn't care about tweets until we see actual policy. This is just noise moving markets for a day or two. If you're trading, manage your risk. If you're investing long term, focus on earnings, not headlines. And if you're here, and if you want to hear more, please subscribe. I'm Sofia Cruz, this is The Meta Markets. I'll see you next time.